Let's get started. Good morning, everybody. So this is going to be an unusual format because we're going to sort of do CalPERS and CalSTRS jointly, so we'll sort of be flipping back and forth. So I want to welcome all of you. Welcome the people who are out in the remote attendees who are here. I think you all know the housekeeping. The restrooms are down the hall here. Packets should have all of your presentations. If you're a remote attendee, the packets are available online. And if you have questions, make sure you see the prompts that are provided during the presentation to contact us with questions, and we'll make sure that we give you a chance to ask those. And if you're one of the folks here, please, before you ask the question, give somebody a chance to come to you with a microphone. So on the agenda, let me pull the agenda out. We'll start with the legislative update from both CalPERS and CalSTRS. Then there was some time to talk about the CalPERS dependent eligibility project with respect to healthcare, and then a discussion of the compensation review. We do have a scheduled break in there. We may move that depending upon how the meeting flows. Then we got CalSTRS implementation of AB 340, the PEPPER bill, and then the implementation of SB 114 dealing with community college adjunct and adult ed faculty and reporting of FTE, and then a discussion on full enforcement, which looks like it's a CalSTRS issue, and then employer training tips, and then an open forum discussion. And there's a couple of things that CalPERS wanted to speak about with respect to arrears billing and the circular letter update. So it's a very full agenda. Is there anything that you want to make sure we add to the agenda? I mean, any issues that you want to discuss, we can certainly leave to the end at open forum, but is there anything else you want to make sure we include in the discussion? If not, I will start with Danny to give an update on CalPERS legislation.
Okay, good morning, everybody. And we will make sure that you guys have some extra time for all the other topics, because really there is not a lot going on with legislation. Obviously, with so much concentration on pension reform at the end of last year, not a whole lot going on this year around pensions other than just trying to clean up PEPRA. So I know that they'll be talking about PEPRA implementation later, CalSTRS will, and she'll probably touch on SB 13 too. I mean, we're always obviously following that bill. It has some cleanup provisions in it. It's got out of the first house and will probably be taken up in the assembly sometime in June. I think they were just waiting for one to get sign off on one final set of amendments. We're all still hoping that there is some clarity around pensionable comp. You know, we haven't heard anything definite yet, but we are hoping that that happens. As far as just some other CalPERS related bills, I think you have a list in your packet. I would be happy to discuss any of those with you. I would just point out two. Our housekeeping bill, SB 215, I think we've mentioned in the past, within that bill is the provision dealing with the PERS-STRS right of election. I think we also had some discussion on it here that we're trying to change that those folks that are not vested, so they have less than 5 years of service, if they switch from a CalPERS covered employer to a CalSTRS and their break in service is less than 120 days, they can choose to stay in CalPERS. So we have that in that bill. However, the Department of Finance has come out with an opposed position on that provision because they believe it is a benefit improvement. So we will be trying to work with finance on that. We may ultimately have to pull that provision from the bill if this is something that you guys feel strongly about. I don't know, raise a hands if this is this important to you, I guess. Is that provision important to you, to CalSTRS, or school districts, I should say? So we got a couple, but so I mean, I think if it's important to you, we're going to need your help and probably need letters and support and writing into the governor's office, because otherwise I think we may have to pull that provision. So I wanted to keep you updated on that. The other bill that we have that impacts school members is AB 507, which is another attempt at trying to increase the death benefit for school members to bring it more closely in line with the death benefit that CalSTRS members have. So it would increase it by, I believe, goes up to $4,000 and then eventually will go up to $6,000. You know, they've tried this bill in the past. It always gets held in appropriations. That's My guess it's going to be the same thing. It's got about a $740 million price tag on it. That would be amortized over 20 years, but it would increase the school pool rate. So again, it's not likely that bill gets out of appropriations. So with that, I'll stop, but I'll happy to answer any questions you have about any other pieces of legislation. Nope. Okay. Yeah.
Want to talk about long-term care? No, it's okay. I'm only kidding. So Melissa, sort of give a similar update on legislation affecting CalSTRS. And by the way, while she's coming up, we do have copies of the analyses of the bills that have been gone to the board, or the board is sponsoring in your packet, so you can sort of see some of the details around those bills.
Excuse me. Good morning, everyone. I'm Melissa. I'm filling in for Mary Ann this morning, who is still meeting with all the legislatures at the Capitol. If not today, but hopefully by the end of the week, she will hit her 100th member. So she is well on her way to hopefully finishing all 120 members by the end of the month. So that's quite a feat, and we're really happy and excited and proud of her for meeting with all those members with all their busy schedules. So with that, my update is similar to Danny's in that there's just not a whole lot going on legislatively. When we last met in February, the legislator was still during the bill introduction phase. Since that time, we have had our 4 sponsored bills introduced and are moving through the legislative process. If you look at your goldenrod sheet, you'll notice our sponsored bills are denoted in the bold text. And so you'll see AB 125, which is the one of our sponsored bill that adds positions for the CFO and the COO. That is currently on suspense in the Assembly Appropriations Committee. AB 989, as well as AB 1379, which is our technical housekeeping bill, and AB 1381, which is our pepper cleanup bill, are moving and are headed to the next House. Another bill of interest would be AB 761, which is the divesting bill from gun manufacturers. That bill is being heard this morning in Assembly Appropriations Committee and is a suspense file candidate. So we are going to be continuing to watch that. As Danny said, SB 13 will be discussed later this morning, so I don't need to go into more details about that. And then if you flip over, you'll notice that there are 2 federal bills that we are currently watching. These bills would amend the Internal Revenue Code and would provide for reporting and disclosure statements by local public employees and retirement pension plans. We have seen these bills before. We are currently in the process of doing analysis to take them to the board. In the past, staff has recommended a position of oppose, and we don't see that changing this time around. Any questions? Yes.
I don't know. Oh, sorry. I don't know if it's you or somebody at STRS, if they can provide more information about the changes AB 1381 makes to Education Code Section 22327. Currently, STRS is only able to request earning records from the EDD for retired disabilitants. But this bill makes changes to give CalSTRS the ability to pull earning records for all teachers, members in DB program, current and retired. I just want to know, what is the purpose of this change?
I'll take that. The purpose is that it provides another tool for us to monitor whether or not people are up against the earnings limit. Because, unfortunately, a lot of the employers are not really good about reporting compensation that's earned through a third-party contract, even though they're supposed to. And so we can get the information from EDD that will sort of help us confirm whether or not, in fact, people are earning income in excess of the earnings limit. It's just a tool that we could use if we need it.
Okay, I just wanted to understand a little bit more. And I do understand what you're saying about the earning limitation. But let's say a teacher works at a public employment, and then they have this private evening assignment, let's say at McDonald's. So when you ask the information, then you will be getting all their information you're asking from EDD, public as well as private.
We haven't decided yet how we don't care what they're making at McDonald's, so I can't, we're not gonna ask for information that isn't of any value to us.
So it will be only the public employee information?
Well, it's not, well, the problem is that it's not necessarily public employment. If they're working for a contractor in the public schools, those earnings should be reported to us, so we'd have to get that kind of information, but, we're not gonna get information, or we're certainly not gonna use information that isn't of any value to us. But we haven't quite figured out yet how to do all that, because we're still waiting for the authorization, but, we have no interest in how much money they're making at McDonald's.
I understand, just wanted to clarify the purpose.
Yeah, the purpose is simply just to administer the earnings limit. And there may be other things as well, but that's what was driving it.
Okay, thank you.
All right. Thank you.
So next, Jan is here. Jan is here, okay, to talk a little bit about the CalPERS Dependent Eligibility Project. And there's a copy of the presentation in your packet.
So good morning, everyone. Jan Falzerano. I'm the project manager of the Dependent Eligibility Verification Project. By show of hands, how many are PEMCA agency employers in the room? Just 2. So the rest of you are non-PEMCA. I'm going to make that assumption. So I just want to change. Is it worthwhile for me to make a presentation for only 2 employers that are PEMCA agencies?
It's up to the audience.
Okay. I can go through the slides really quick if the group is okay with it.
Yeah, I think that's a valid point, because even if their county may not be an employer, they may have subordinate districts that are.
All right. So I'm going to probably fly through the first 10 slides, because those are just project background of how we are and how we got to today. But basically, starting on slide 3, this is a chart of the 21 initiatives that was approved by a board in January of 2012. And we went through a whole year of doing a market scan, basically doing focus groups, stakeholders, relation groups, as well as surveys of our constituency to see what was important to them in the healthcare market. And specifically to them, obviously, I'm going to focus on the Dependent Eligibility Verification Project. So on slide 4, over the years, we researched a lot of other state agencies and universities that conducted a dependent eligibility verification, and we found that our research showed approximately 48% of dependents that are enrolled in our health plans are not eligible for eligibility. So when you take a look at the CalPERS population, we have about 369,000 subscribers that have dependents, and we have about 734,000 dependents that are currently on their plan. So just removing 4 to 8% can provide significant savings to us. One of the other things that we also learned from talking to other states was amnesty was one of the best practices. And so right now we're going through a current amnesty offering to all of our membership. Between now and June 30th, they can disenroll any ineligible dependents up through June 30th. Slide 4 is just some of the activities that we have taken place over the last year. We've conducted an RFP to select a vendor that will actually conduct the verification for us. We submitted regulatory changes to allow amnesty for our membership, and we're rolling out some communication plans to our membership and to our employers as well, too. So slide 4 is just a very high-level overview of the timeline of our project, and I'll go a little bit more into detail towards the end. Slide 5 is the difference in the roles of the employer versus CalPERS throughout the amnesty period and during the verification process. So CalPERS decided that we're going to conduct the entire amnesty period ourselves, but when we get to the actual verification, that's when we're going to have a change of role responsibility and delegate all that responsibility to our vendor, which is Health Management System Employer Solution. We call them HMS for short. Obviously, we wanted to be able to capture data relating to this project, so we developed 3 new reason codes into our system. So I'm on page slide 8. And so for employers, these are the 3 new reason codes that we're asking them to use specifically for the amnesty and for the verification process. On slide 9, these are the communication that has gone out. We sent out a circular letter to our entire employer membership. We sent out our first amnesty letter to our 369,000 subscribers on March 26. And we have information online both for employers and members on FAQs and all the scenarios and specific questions relating to the project. And on slide 10, right now we are currently in the middle of our amnesty period, and we are hosting a series of webinars for all employers, and we're hosting weekly employer webinars all throughout the month of May and all throughout the month of June. So if you're an employer and you want to find out more information about this project, you can go on our CalPERS and you can actually log in to participate in one of our webinars. So on slide 11, our verification period, we're going to start with the state population first, starting with July of 2013 through June of 2014, because we have about 222,000 state subscribers that have dependents. And then we're going to follow with the public agencies, and the school population would be the very last population that we would be verifying. The state verification, basically, because of the large size, we can only accommodate about 45 to 47,000 subscribers in each cycle. So we're going to roll the state population over 5 cycles that you will see on slide 12. And on slide 13, the public agency, we're going to roll that over 3 cycles. And then specifically for our school employers, we are going to roll that out on December 1 of 2014. So it's going to take us about 18 to 22 months to do the entire population cycle. And also for school employers, some of them are already conducting their own verification project, and you may or may not be aware whether you're in a PEMCA agency or not. American Fidelity, I think, has gone out to some of the school employers to conduct the verification on your behalf. And so we are working closely with American Fidelity for those schools that have completed their own verification through American Fidelity. If they submit the data to us and you did your verification within 24 months, we will take a look at all that data to determine whether or not you would be exempt from the CalPERS verification. Slide 15, probably not relevant to most of you, but this is just all the communication channel that's going out to each and every single member, subscriber, and throughout the verification period. So they have ample opportunities to know when they need to, provide us with supporting documentation for all the dependents that are enrolled in their plan. And then slide 16 specifically is on the employer notification that we're going to have throughout the verification cycle. We definitely ask for employers to please go onto My CalPERS and check to make sure your contact information is updated, because that is how our vendor, HMS, will be in contact with you, is all through emails. And they will also give you the ability to go onto their website to actually log on reports specifically to your agencies. So you'll be able to see who submitted their documentations and who didn't submit their documentations, and then generate a report specifically to identify those that did not comply so that they will be removed from the health plan. And so, in a nutshell, that is the presentation. Is there any specific questions? Yes.
Frances Miraz from LA County Office of Education. In the mailings that went out, there was a note that employees could voluntarily disenroll in eligible dependents during the amnesty period. If an individual failed to disenroll an ineligible dependent and it was later on found out that the dependent is ineligible, that the employee would be responsible for any costs incurred by that ineligible dependent, maybe. How far back is that going to go? Because the question was asked by benefit department. How far back would they have to cover services that were provided?
The existing reason codes in the system allow us to go back 6 months. As the employer, you have the right, depending on the specific circumstance that your employee discusses with you, you can choose to just use the regular reason code, and you can decide as an employer if you want to go back for back premiums for that specific employee.
So then it would be at the employer
It's at the employer's discretion.
Okay.
However, we believe that most people just don't know. There's going to be the rare circumstance that there will be some egregious fraud where people knowingly put on a girlfriend or a boyfriend that's not even part of our eligibility list. And in those circumstances, we have to evaluate those on a case-by-case basis and determine what our next steps would be at the time. Any other questions? So for the PEMCA agencies, I actually have a flyer here with all the webinars that is being hosted by HMS. I'm going to leave it at the back of the table if you wish to take a copy. Okay? All right. Thank you.
Thank you, Jan. So we're doing great on time, and we actually had a question come in via email, and I'm going to take 5 minutes and ask Renee Ostrander. Renee, is that okay? On the spot here. To come up, share the question. It is PEPRA related, a little bit off topic, but we think it's worth addressing right now. So here comes Renee.
I didn't bring my phone with me. Can you read the question?
Yeah. So the question was, we received the attached unofficial copy of CalPERS resolution template from another county office. The email sent with the resolution mentioned that CalPERS will be issuing a circular letter with the official resolution template for an exemption from the 180-day waiting period. Can you please confirm a circular letter will be coming, and can you give us an idea of when it will be published? We are receiving many questions concerning the exemption process.
Good morning. My name is Renee Ostrander. I am the PEPRA implementation lead for CalPERS. So this is related to the implementation of PEPRA. There is a section in the statute that relates to once someone retires, they cannot come back to work for 180 days unless they meet a set of exemptions. So for CalPERS, what we are doing is we are working on developing a circular letter. That circular letter is going to talk in depth about not just PEPRA, but other rules that we've had come into play recently in terms of when a retired annuitant can come back to work and how quickly. One of the things that will be in there is some tools for both employers and for members to understand when those exemptions apply and the length of exemptions, because there's other rules in addition to PEPRA. So we are anticipating that circular letter is not going to come out until probably late May, maybe early June. So I'm not sure, I don't know how somebody got an unofficial copy, and I know that we haven't fully vetted it yet, so I wouldn't deem it as accurate. So we expect it to come out, and there will be quite a bit of direction in that. And there's the question.
Grace Finley with Fresno County Office of Ed. We got a copy of that resolution from someone at CalPERS. We are in the process of taking to our board a resolution that we have come up with on May 17th.
Mm-hmm. Okay, so and this operates in a different area other than what I oversee. So I know that what has been provided to me is all in draft form, and that we haven't finalized it internally with some of our key people. So,
And we did.
But if you did get it from staff, then
We did get it from staff, and it did say that there was a circular letter coming out. It said sometime in February, but we've long since passed February, so we're still waiting.
Unfortunately, because of the not necessarily conflict, but making sure that the laws all work in concert with one another, because it wasn't as simple as just PEPRA. So in trying to make that happen, we've had some delays, just wanting to make sure that we provided a holistic picture to our employers.
We're just hoping that what we're doing suffices when it
If
goes up.
if you want to provide me a card afterwards, and then I can follow up on that for you directly, since you're going to be taking it forward to your board.
I have Veena Chastri from Orange County. Similar type of situation, but in the meantime, if we send a resolution of the district board approval for that extension of 180 hours, I mean that resolution, would that work though? Because we have people who are working on it right now.
I would have to, I can't answer that right now. I would have to check with the area that's responsible for that.
Okay.
So, but once again, if you just provide me your information, or I can give you both my card.
Okay.
And so you can send me emails to follow up, so we
Okay,
can make
good.
sure that those are handled.
Thank you.
Okay.
Follow up, because there was a question asked online on a similar situation with respect to CalSTRS, because I think because they saw the draft resolution from CalPERS, they want to know if we're going to do the same thing. We sent out, I think at the beginning of April, not the circular, but the directive with respect to how to implement the earnings limit changes for this year already, and it did not include a resolution. I'm not aware that we are planning on doing a resolution. The law, there's a code section, which is Education Code 24214.5, which is very specific information about what needs to be included in the resolution. So as long as the resolution that if you're trying to provide for an exception from the 180-day limit for our system, just use what the law says as guidance as what the resolution should say. And if it includes all that, then there shouldn't be an issue. But I'm not aware that we were preparing or planning on doing a draft resolution. It seems pretty straightforward as to what their resolution ought to say. Okay? Anything more on that? So we'll move back onto the agenda. Terrence, a compensation overview for CalPERS.
Good morning. My name is Terrence Rogers, and I work in the Compensation Employer Review Unit with CalPERS. And I was here, I think it was in March, and there was a request to have someone from Comp Review come up and speak about compensation. So that is my purpose of being here today. I actually do not have an agenda because I wanted to hear from you. I think many of you I've either spoken with or communicated via email or telephone. So I figured you were probably tired of hearing from me, and I wanted to open it up to all of you. So just real quick, Danny touched on SB 13. As you know, there hasn't been much movement on that. We're very hopeful and waiting with bated breath that there will be clarifying language as it relates to pensionable compensation. But until we see that, then we're still in that standard holding pattern. We sent out circular letter, I believe it was 200-062-12, which talks about what CalPERS currently is considering to be pensionable compensation based on our current analysis and where we're at in the legislative process. Please know as legislation comes through, that is subject to change, but we want to provide the best guidance we could at this time. AB 220 is working its way through. It made two very minor changes to 20636.1, which we all love, comparable compensation earnable for school members, just to clarify that that section is not subject. New members are not subject to that section. Two other things just real quick, and then I'll open it up, promise. The board meeting this month, May 13th through 15th, there will be a discussion on pensionable compensation. So if you have the time and ability, you can actually view that online. And that should provide hopefully some interesting dialogue and give you a little bit more information regarding pensionable comp. And one more. Oh, CalPERS currently is shooting for providing clarifying regulations on pensionable comp, which we hope to have out by late summer. We're working through that, doing our best, but that's our goal. And that being said, the floor is yours. Hi, Francis. Good morning.
Francis Moraz, LA County. If the results of SB 13 or regulations go forward and it causes a change to special comp for new people, is that going to be retroactive back or going forward?
Great question. Just to clarify real quickly, remember special comp is only applicable to classic members. It's specifically defined in 20636.1 and 571. So there isn't special comp per se for new members. It's pensionable compensation that meets that definition that was provided. As far as the application, Renee, do we have any indication? Do you know how we're going to handle that? It should go retro. We'll work through that.
Right. It should go, because the bill is retroactive to January 1st, we don't have authority to pick a different date. I mean, it is what it is. We knew that in providing the direction that we did early on, that it was going to be preliminary and that there could be changes. In terms of how we would fix anything that was incorrect from the original interpretation, yes, it's retro back, but how we fix it, we'll have to decide. So, so I would leave that up in the air.
When you said that the pepper member doesn't have special comp, when I do my file, it's listed as special comp, and I have to pick what that is. So is that not special comp?
Please forgive me, I am hyper technical. So
Okay.
when I say it's not special comp, it's because that's specifically defined for classic members, but it is considered an item of pensionable compensation. So
Okay.
for all intent, it's a different mindset, but for practical application, yes.
It's okay, because I get the little error that says I need to specify what type of special comp, because it was a pepper member. So I was like,
The type of pensionable comp. Forgive me,
Okay.
I'm a Pearl nerd. Hi, Bina.
Hi, Veena from Orange County. I mean, one of the clarifications which she just did is our terminology of special comp. So those items that were listed in that circular letter were, from our terminology, some of the items for PEPRA member are still special comp. There is no change to that, right?
Correct. That is still the best tool. That circular letter I referenced is still your best tool. Those remaining 98 items are considered pensionable compensation
Okay.
at this time.
Okay. And my other question is about your comp review unit. How does that unit work? They only look at the records of people who haven't retired or close to retirement only, or they also look at the records of retired members?
That's a fantastic question, and I know this comes up a lot, what comp review is looking at. In general, it's retired members because of where we're at.
Retired, you said?
Generally, it's members that are retiring in most
Okay.
cases. There are times when we're able to prospectively review compensation for active members, depending on the individual circumstances that arise. So it is generally when members retiring, we're taking, in most cases, our first look at the compensation, going back to review it complies with the law. The whole purpose of this system is to help us get ahead of this thing and get perspective. We're working through that. It's a work in progress, but in general, it's when members are retiring, it triggers a review. So we go through and take a look.
Okay, but those who have already retired 5, 10 years ago, you don't look at them though, right?
Possibly. Again, it would depend on the situation. For instance, say that there was an enterprise compliance tip that came through and said this person may have had compensation reported that wasn't considered compensation earnable. The PEARL does provide that we can go back and look and correct any errors or omissions that have occurred.
Okay, thank you.
You guys have more questions than that. Hi.
Hi, Victoria from Marin County Office of Education. And I'm thinking that the reason you were requested to come was from a discussion about reportable hours for full-time. And so the discussion was that in the PEARL, it's all hours up to 40 hours a week is reportable. But in the practical application for most of us, 8 hours a day is all that would be considered non-overtime. And so for employees who do not work 40 hours a week, but may work 10 hours in one day, we are supposed to report up to the 10 hours that day. Is that right? Because it's not over 40 hours a week?
You report up to the 40 hours, right? So you're going to look at, that's what the PEARL provides for that week. 40 hours per week is considered full-time in 20636.1B1.
Right.
So up to 40. If you pay that person overtime, remember, it's not overtime until it exceeds 40 hours for PERS purposes.
Right.
For classic members.
What do you mean for classic
Well,
members?
pensionable compensation has a new definition.
Oh,
So we're talking about classic members. The pensionable comp does say for paid up to for services rendered on a full-time basis.
Right.
So that, and you just brought up a really good point, because 206.36.1
Doesn't apply.
specifies that pensionable compensation is new legislation. So
It's just vacant. It's just not, that part's not in it.
that's something that, you know, when Renee was speaking to bringing the Pearl or into concert with PEPRA,
Right.
that'll be something that's going to be worked through.
Okay.
Does that make sense?
It does. Doesn't necessarily help,
No.
but it does make sense.
Terrence, just to make sure we're all on the same page, can you give a high-level explanation of classic member versus new member?
Yeah, classic members establish their membership prior to the effective date of PEPRA, 1/1/13. That sound okay, Em? Yeah. So classic, if you were a member prior to 1/1/13 and you don't have a break in service and come back and become a new member under 7522.04, then you're a classic member.
And just to continue with the original question, so for the example of that 10-hour day, all of it being reportable because it's not over 40 hours a week, that additional 2 hours would be reported at the straight time rate. Is that right?
That's right. Up to
Okay.
40 hours per week is normal monthly rate of pay.
Okay. Mind if I ask about coaching stipends, since
Please
that's
do.
this
I
group's
love coaching
favorite
stipends.
topic? Because it seems to be the classic catch-22 for us, that if the person is not over 40 hours a week, that it is reportable, and if it doesn't require a credential, then it is PERSable, and yet I've yet to see a salary schedule that identifies a time base that's hourly, daily, or monthly anywhere in the state.
Let me go back. Can I go back to
Yes,
it's
please.
reportable? A stipend is not reportable.
But it's work.
If it's an established position, that coaching position, and it's on a pay rate, and that member's work, it's on a pay schedule, pardon me, and they're working less than 40 hours,
Yeah.
then you would report the time rendered in that, their initial or primary
But we don't
position.
ask them to keep track of the time. But it's not hourly, daily, or monthly.
If it's not on a salary schedule, it's not reportable. It's not an item of special compensation. If there's not a pay rate associated with it, it doesn't meet the definition of compensation earnable, and therefore it's not reportable.
Right. But at the same time, it is non-certificated work in a school by a member.
But it still has to meet the definition of compensation earnable under
Oh, right, to
206.36B1 and
report
C.
it. That's why it's
To
a
report it.
catch-22.
To report it, right.
It should be reportable, and yet we can't.
It's reportable when it meets that definition.
Right. So then to continue with that, if we don't come into that particular situation and yet we have a retiree come back and hold that non-reportable position, are we out of compliance? Or are we just going to ignore that position altogether?
Would they exceed 960 hours? I mean, I'm getting beyond my territory, and I can see my boss
Well, I mean,
looking
within
at
the
me, so I better pull
180
it back,
days,
but-
or no, we don't know. They wouldn't be more than 960 hours, but we don't ask them to keep track of hours, so it wouldn't really be applicable.
I don't think that falls under comp. Because they're retired, so they're no longer a member. We would
Right,
look,
but would they potentially be out of compliance if they came and did that within 180 days of retirement?
I think the safest way for me to answer that is to ask our benefit services division
Okay.
that deals with working after retirement. But because comp earnable is only applicable when you're a member. When you're retired, that's not the case any longer.
Right. Okay.
So Victoria, I'm
continued.
gonna have benefits contact you
Okay.
and see if they can help with that.
Super. Thank you.
Thank you.
Yeah, can we share that back out at maybe the next meeting? Because this has been a topic we revisit
Absolutely, we'll do that.
every year or so.
We'll work with benefits through Terrence, get that answer, and we'll circulate it through the group via email.
This is to go on from the coaching stipend. If it is on the salary schedule as a flat amount, and there is a job title for it, is that considered creditable service?
If it's on the publicly available pay schedule and it meets the requirements of a publicly available pay schedule and establishes a pay rate and they render service, it would be if their hours are if it's not considered overtime. So if they work a
Right.
40-hour position, it's not, okay.
Say it's someone who's 30 hours a week. They take a coaching stipend, well, a coaching position. They're given $1,000 for coaching basketball. And that's on the salary schedule that way.
So you have that pay rate on the salary schedule, on the pay schedule?
That says it's $1,000.
So you would report the 30 hours for their primary position, then you would report the services rendered up to 40 in that position as a coach, if it's on the publicly available
But
pay
there's
schedule.
nothing that stipulates how much time they have to put into coaching. It's flat out, we're going to give you this money. It's at your discretion whether you want to have the kids there 3 days a week, 5 days a week. Your games are 2 days a week. You make up your own schedule. So how do you report that? You have a flat amount.
It doesn't sound like a pay rate when it's a flat amount. And if it's not a pay rate, then it's not comp earnable.
It's not time-based, but it is on the salary
Then
schedule.
it wouldn't be a pay rate. You'd have to establish a pay rate for it. I understand we're going in circles. I understand this is a
Okay.
challenge. I appreciate that. I sincerely do.
Because that's
But
where we've
all I
gone.
can do
We've
is-
always gone back, well, it is on the salary schedule because it's either a flat amount or maybe 1% of step A of the certificated salary. But I mean, it does go back to, it is posted, this is what you get for that. But there's nothing, there's no time base to it. It's at the discretion of each individual.
If there's no time base, I don't know how we get to meeting the definition of pay rate, though. And if it doesn't meet the definition of pay rate, it's not reportable.
And could people asking questions, please make sure they state their name and where they're coming from.
Francis from LA County. Okay, if a district establishes, let's say they come up with this $1,000 amount that they're going to allow for coaching basketball, but if a district establishes an hourly or daily rate to pay and pay it over the period of time performed, they can equalize the pay over that period of time. Is that correct? Say it spans a 3-month period.
Yeah, season.
And they pay an hourly or daily rate over that 3-month period, they can equalize the pay over 3 months.
You mean provide equal payments?
It's like estimated rate.
You in this case, in this very rare case, well, this particular item, not the situation, obviously, but this particular situation, I mean, that's tough to answer without seeing what it looks like, you know, because we're talking the world of theoretics. For me, you guys know it cold. I can appreciate that clearly. For me, without seeing it, I mean, when you say equal payments, that's probably what you would have to do, right? Because you have a pay rate. So this is what the pay rate is. The pay rate's $1,000 a month, but they're really only working 10 hours a week. So 10 hours a week, you do the math there, whatever that math is, and you report the pay rate and then the lowered earnings, up to 40 a week. See, I knew I needed to get my sleep last night.
Hi, this is Rina again. I have 2 questions. One is about the reciprocity. Let's say an employee was in a agency A which has reciprocity with PERS, and when they come to agency B, PERS agency, which is within 6 months, they meet all the qualifications, but they come back as a non-member to this agency. So once they qualify, let's say after 1 or 2 years to PERS membership, since they came to the PERS agency within 6 months, are they supposed to be classic at that point or PEPRA once they qualify with 1,000 hours?
Hi. The rules around reciprocity, which actually, if you watch the May board, you'll be seeing that we're bringing forward regulations on reciprocity. One of the items that we put in there for defining reciprocity is employment that leads to reciprocity, which matches to what we currently have in statute today in broader terms of reciprocity. So it would be the employment that leads to membership. So if there's less than a 6-month break in service, but with the new job they don't have membership, but that employment leads to membership, Then at a later point, past the 6 months, then yes, they would still be defined as classic and they would have reciprocity. Okay, good.
And the other question I have is for you and Tim together. We are rewriting our system with all these changes going on. And the way I understand PERS, they always, let's say the hourly employees, they always take the hours worked and divide it by 172 to give the service credit, right?
173.333.
I thought 172 was for service credit and 173.33 was for final comp.
I think where you're coming up with the 172 is under government code, I believe it's 20962, which establishes a year of service credit. 10 months if you're full-time, you earn a year of service.
Right.
If you're hourly, it's 1,720
Okay.
to earn a year of service
Divide
credit.
that 1720 by 10 months is 172 hours.
If you worked right, you would meet the threshold
So
under that case.
First, I want to clarify which number do you use, 172 or 173.33? Because we want to use the same number.
For pay rate purposes?
For service credit.
Well, service credit is a derivative of the earnings over the pay rate.
Yeah,
so
so
if you
hour works divided by 172 for hourly lines, I understand you give service credit.
it's 173.333, and we get there by if you're a 40-hour week employee. 40 times 52 is 2080 divided by 12 gives you 173.333.
Okay. So lots of time we don't know whether they're 40 hours, 37 and all. We look at the whole month and we do monthly reporting. So I wanted to confirm first the number that you use. So we use the same number in our system to calculate the service. So my question is, if you, let's say, use 173.33, and the months where employees work 184 hours, so what happens to that extra hours, like they just go dumped in some other basket? Because we pay money, employee and employer share on those hours. And if they don't do anything, we don't want to pay that money.
If they don't, you mean if it's not going toward their service credit?
Exactly. So we want to write and monitor at our end also that we give the employee the right service and we only give the money to you guys what should be given, not like it goes in the dead bucket.
There's no dead bucket.
No
it's
dead.
Going into the employer's account.
So, I mean, it's not dead bucket if they refund. But if they don't refund, then if there are 184 hours, 176 hours, 180 hours, whatever, the employee is only getting 0.1 per month. So I wanted to understand how your system works, so we write our system accordingly.
I'm not positive that that's the case, that it cuts it off right at 1.0.
So do you kind of look at the whole year then? Mm-hmm. Let's say it added up to more than 1 month for hourly employees because they work 184. So if it was less than 1720, they do get the credit, service credit. But if you're dividing by 173.33, I just want to understand how your system works.
The payroll question, how it looks in the system, I'm not the best person to answer that. I think I know, but I don't want to think I know something and tell you. I want to find out from the source. So I'm going to talk to Chris Owen in our payroll and ask him about that threshold. Because hypothetically, in that same situation, there could be February and you have President's Day and you only work 60 hours.
60 hours.
So
see, we have
it looks to us that, it's 0.98.
Yeah, and
but
I
in the next month,
that.
1.02 or 1.016,
Exactly. And
whatever.
that's why I want to understand how do you do that.
Okay, so
from a payroll perspective, if you were to report, say, an hourly pay rate and so much earnings, and then we take the earnings report divided by your hourly pay rate, and it comes over 173.33, your payroll record's not going to error out. It'll post. So how service is rendered if you report greater than 184 hours for 1 month based on the mathematical formula, and then the following month you only report 160, then the following month you have 173.33. From what I understand, it averages out over the entire year to give them one full service credit. If you really need to know how service credit is calculated, then I can't answer that question. I'd have to go back to the team that uses, the data you report and come up with an average and tell you how service is rendered. And then if you average greater than 173.33 for an entire year, say for instance, you've been reporting 180 hours for an entire year, what happens to the additional hours and contributions reported on those member accounts? Does it just get left there as member contributions? And if they refund, they get it back? Those questions I have to take back to somebody else. And Marion, I don't know who to take that back to. But how it's used to calculate the retirement, also it had to be used to somebody else. I don't know.
But, the other thing to think about too, though, Vina, I mean, I work full-time, so I am reported monthly. I earn, 0.1 years of service every month I work. By the end of this month, I'm going to have a year of service. I'm going to work in June and July, and I'm going to have that reported. I'm not going to earn service credit on it, but I'm going to pay my contributions because it all goes in, and that's the whole funding mechanism, right?
I understand that piece very well.
You
the
do.
problem is that we want to rewrite a system to match your system, how things calculate.
Okay.
But we don't want to take short anybody of the service credit. But we want to make sure that when they have multiple jobs or something, we have some kind of a standard number that we can see that it will benefit overall for next couple of years,
Well,
it will work out right. Because right now it's a hodgepodge, monthly lines, hourly lines, and multiple jobs. So we just need some kind of direction and more insight to how to write the new system.
What I can say with certainty is for non-certificated members, report up to 40 hours per week if they're working that.
But we want to know for month.
And we're gonna chase.
Okay.
Yep.
Thank you.
Thanks, Vina. No more? We good?
Oh, come on, don't let them off so easy.
That is an easy day for you guys. You guys make me think. I'm going to be thinking about this all night.
I have a question on when
Please state your name. I'm sorry, could you state?
I'm sorry, Debbie Bentley from Napa County Office of Education. When people from PERS, they go to retire, and it's on our contract, they can use their unused sick leave towards their retirement. How many hours is considered a year of service credit?
2,000. 2,000
hours?
Yep.
Okay.
Yeah, you earn for each full day, which is 8 hours, you earn 0.004 years of service, and that's in 20963 or 20965.
Okay, great, thank you.
One thing real quick to clarify too, Vina, is remember the 40 hours, that's for non-certificated. Okay. Okay.
Great.
Thank you all so much.
Thank you. Any questions? Actually, Carmen, any questions from remote? Oh, really? Oh, okay. Okay, so we're about 30 minutes ahead of schedule, so we did have a break scheduled for now. So do you want to take a break for a few minutes or just keep moving on the agenda? It's up to you. Move on? Move on? Okay. So Valerie Ferris isn't here, but Cassie is here to give an update on the implementation of AB 340.
Remember how to work this. Good morning, everyone. My name is Cassie Mallet-Beck, and I'm filling in for Valerie on giving you an update on the implementation of AB 340, kind of where we're at. I'm going to briefly go over, just recap kind of what we've done. So we have identified our population, our 2% at 60 and our 2% at 62. Remember, anyone that was established in our system prior to January 1st, 2013 was deemed 2% at 60, and anyone that you guys establish after 1/1/2013 is our 2 at 62 population. Remember, on The MR87, let me switch this one. On the MR87 and REAP, you guys cannot backdate anybody that was not in the system prior to 1/1/2013. So if you have somebody that was defaulted into 2% at 62 incorrectly, you can contact Member Account Services, your representative, and they can help you through that process. We added 3 new business rules with that. First one is Business Rule 083, and that was to close the loophole on reporting non-member lines prior to the effective date. We already had a business rule that captured the member lines that would have been, if you would have tried to report member lines prior to an effective date, this closes the loophole. So payroll lines cannot be reported prior to the effective date. Business Rule 114 allowed for us to have assignment code 72, which is how you would report any special compensation for your 2 at 62 population. Remember, that stays in DB, and that's only for 2 at 62. And Business Rule 115 basically made it so that assignment code 72 is invalid for your 2 at 60, because your 2 at 60 population, you would report your special compensation as you always have with an assignment code 57 and a CC6. So that's just a little recap of what we've done so far. And next steps are, we're still in the discovery stage. I think we've talked about this in the last couple EACs. We're on schedule as far as implementing the CAP for the fiscal year 2013-2014. And a couple things that we're planning is we're going to modify SO to monitor the contributions and to allow for $0 contributions to come into the system. So if a person has reached the cap, we still want to see the pay rate and the earnings and the service period. We just won't be receiving contributions from you guys. So we would have to make changes to our system on that, because currently our system would not allow for a member line to come in with $0 contributions. We currently display running totals of the earnings on the service credit tab in REAP. That's something that's currently there. We want to provide other tools to help you guys monitor employees that are near the cap or going to reach the cap. So that's something we're looking into. And during the implementation, we'll probably reach out to a couple counties to pilot how this is kind of going to work as far as the payroll and the system changes coming in. So you have that to look forward to. We're also going to add a business rule to limit the amount of special compensation for the 2% at 62. I think I mentioned that at the last time. We're looking at the range from about $3,000 to $5,000 a year. We haven't set on that yet, but that's kind of what we're looking at. We're also going to make modifications to SO to allow for different employee contribution rates for the CalSTRS 2% at 62. Remember, PEPRA said that the members must pay at least 50% of the normal cost. We don't expect for that number to change prior to July of 2014, but that is something we need to build into the system to allow for. I wanted to briefly go over credible compensation for 2 at 62 because we're still getting a lot of questions. Remember, you can always contact your Member Account Services representative if you have any questions. But for our 2% at 62, what's credible? So it has to be part of the normal monthly rate of pay. It has to be on a publicly available pay schedule, and it has to be paid to all in the same class. So it has to meet all of that criteria in order for it to be credible compensation. We've stated in the past that things like educational stipends would be included, provided that it met all three. So it's part of the normal monthly rate of pay, it's on a publicly available pay schedule, and it's paid to all in the same class. What's not creditable are things like one-time payments, allowances or bonuses, retirement incentives, anything that's not considered part of the normal monthly rate of pay. And these are just to name a few. These are like more, I think, of the popular ones. And these are our resources we have. Remember, you have SO, there's FAQs out there. There's the directive on pension reform. We had the Employer Connect that I believe was out in around December time regarding pension reform. We have a couple things on CalSTRS.com. And then you can always contact your Member Account Services representative. So with that, that's all I have to share. So if you guys have questions, I know I wasn't getting off that easy.
Francis from LA County. Going back to what's creditable, where you're saying, you mentioned like an educational stipend that would be part of the normal monthly rate of pay. Are you saying that you don't want that reported as a CC6?
It can be reported as a CC6, but it would have to be monthly, ongoing, in order for it to be creditable.
Okay. I know that you're developing regulations for credible compensation for the new employees, new members. If we've gone ahead and allowed certain types of special comp to be pensionable, and the regs come out and say these types of compensation are no longer pensionable, is that going to be retroactive back for CalSTRS also, or going forward?
Well, let me first clarify, the regulations we're working on are for the existing members, not the 2% CC2 members. The statute is going to clarify more specifically what counts and doesn't count for the 2% CC2 members. So, and that's still under discussion about whether it has to be paid monthly or, you know, these other issues around lottery and parity pay and all that stuff that's sort of outside of our hands at this point.
Okay, but once that's established, is it going to, do you know if it's going to be retroactive?
Language in the law at this point says that it takes effect January 1, 2013. So it would apply retroactively.
Any other questions? Okay, thank you guys.
Thank you. See? So Nancy, the implementation of SB 114.
You're ahead of schedule.
I know.
That was exciting when I got a call at my desk just now and said, "You're on." Good morning. I'm Nancy Roberts, and I'm part of the implementation team for SB 114, and it was a new bill that was passed this year that expands a little bit of the language for your community college districts. The TRL section is 22138.5. And it requires a little bit of extra language in it for the coming year, starting July 1st. And so your CCDs will want to be up on that. We'll have a directive out before the end of the year that'll give them the details of it. But the bill is out there and they can read that. I'm coming to talk to you specifically about what CalSTRS part of it is, because we need, according to the bill, to receive all of the bargaining unit agreements for your community college districts starting in July. So I wanted to show you a little bit about what the screens will look like, because what we're doing is we are creating a way for you to get them to us in SO. And I know not all of the community college districts are, probably most of them have access to SO, but if they don't, then you, the community, or the community college district will have to get it to you and you'll have to submit it to us. But what we've got is a new drop down. I don't know if you can see it on the screen because it's kind of small, but we do have where your monthly and your supplemental reports, the drop down that gives you all of the types of files. We have a new one for community college district bargaining unit agreements. So Carmen, next slide. And the drop down will give you the from date and the to date. Now, most of the bargaining unit agreements are 3 years, it looks like, from our research. So you're probably right in the middle of some of them. So they might need to be amended to comply with this law. But even if they're not amended, go ahead and send us what you've got if you're in the middle of your of the time frame. And give us the to and the from years, and you can send us an amended one as soon as you get it. And you can also enter that as well. And it'll let you put comments in there so you can explain to us what it is you're doing if it's an amended one. And we will collect those at our end. So, Carmen, next slide then. And we'll have a drop down for the years, for the fiscal years. If you're in the middle of your cycle with these, you've got some backdated years you can use. And so we'll need the to and the from years. We know they're not all fiscal years. Some of them are calendar years, it looks like. Some of them have odd dates based on our research. So whatever you've got there, you can put in the year it starts and the year it ends, and then we'll collect all of those. So we just wanted you to be aware that we've got that coming in. So that'll be a new feature for you, and it should allow you to submit those to us as simply as possible, and they'll come to us on a PDF. And it looks like those are easily available to everyone. So if you've got questions. Otherwise, it's a pretty simple process. Yes, Vina?
I just wanted to clarify that our community colleges are supposed to upload the information
Yes.
to you, not the county offices.
Only if the community college can't do it themselves.
Okay. Okay. So they are going to receive a letter that they will be doing this.
They will receive a directive. The directive will be out in probably June.
Okay. Thank you.
Yes.
Francis from LA County. If the community college does not respond to the directive, is CalSTRS then going to come to the county office to obtain the information?
We would probably ask you about it, that it's missing. It would be important that they comply. Yeah, it's a pretty simple system. We tried to simplify it for you. Our IT department is working on it now. So those drop-downs are not available to you yet, but they will be as soon as that portion is complete. So if you're able to get them in earlier to us, better yet. But you might be put a bug in the ear of your CCDs that this is coming. They might want to read the bill and see the additional language that they'll need to put in their bargaining unit agreements. But even if they don't have that available by July 1st, just get in what you've got and you can send it amended later, and then we'll be able to collect everything. So, okay, thank you.
Thanks, Nancy.